Gold and silver are inching higher as the US dollar slumps to its lowest level in more than 3 years. On Thursday morning, August gold was trading above $3,340, while silver hovers near $36.50 an ounce. But gains remain modest as geopolitical tensions in the Middle East ease off. So what's driving the market right now, and how much higher can metals go? Chris Vermeulen from the Technical Traders joins me now to unpack the signals he's watching. Chris, thanks very much indeed for your time.
Always a pleasure. Thanks for having me.
All right, so let's start here. Federal Reserve Chair Jerome Powell says it's too early to cut rates, even as tariffs risk fueling inflation. From a commodities perspective, Chris, especially metals, how do you see this mix of delayed rate cuts and tariff-driven price pressures playing out in the months ahead for you?
Yeah, I mean, I don't look at too much interest rates in terms of how they're going to directly affect metals. I kind of see the interest rate market as when the economy gets into a difficult situation and the stock market gets into a difficult spot, that's usually when the Fed starts to cut rates. But when we look at the 10-year yield, for example, yes, they've come down a little bit over the past couple of weeks, but in the grand scheme of things, the interest rates have a very strong chart pattern pointing to they're going to hold their value roughly for, I think, quite some time, several months, maybe even go higher. Obviously, that could put some pressure on the equities markets and companies if interest rates go higher. So I'm neutral to bullish on interest rates at this point still. And I think it's going to take a lot of damage in the economy or the stock market before they start cutting rates. And obviously, rising rates could cause a problem for miners and metals down the road. But right now, I think it's fine.
Yeah. So with gold holding firm above 3,340 and the dollar at a 3.5-year low, how much of this rally is really about technical momentum, Chris, versus investor anxiety over what a more inflation-prone Fed might look like under President Trump?
Mm-hmm. Yeah, that's a good question. I think gold has been holding up and moving higher really for several years, more so recently. More so the uncertainty in the markets. I mean, we have a new president. We've got all kinds of rules and regulations changing hands very quickly. We've got wars going on. You would think the amount that we've seen the U.S. dollar fall would actually push gold even higher. But I don't. I think the dollar is kind of a bit of a separate scenario. People are boycotting the United States, it seems, in certain situations. They want to stay away from the dollar. They hate the dollar. And people are moving to gold as that defensive play. So I still like gold. I naturally would have actually thought gold would have a much bigger move more recently with what's going on overseas and the bombs being dropped and all that uncertainty. But gold has been trading sideways for a couple of months. It did this last year back in October, November area, just before it started another leg higher. So gold, it's had a beautiful run. It's been pausing, consolidating, which is a bullish sign. I'm expecting gold to rally to about $3,750 per ounce, probably over the next 2 to 3 months. So it's holding its ground, and I think it is going to go higher because I think the uncertainty is going to continue to push up with investors.
Right. Now charts-wise, what are you looking at in terms of patterns? Because you usually have a very nice story to tell me in terms of what you're observing on your charts.
Yeah, when we look at the chart of gold, we can see here, if I was to just zoom out a little bit, this is the daily chart of gold. And long story short is gold ended up hitting a major target we wanted here around 2750, 2800. And since then, it went into a multi-month consolidation. Now, based on technical analysis, we came to this conclusion through multiple different patterns. But this next target that we've actually hit is another Fibonacci target that has hit a measured move, and it's consolidating. So this is what we want to see. Typically, after a pause like this in gold, you'll tend to see the trend that goes up into this pause is what's going to continue after it. So I'm expecting another push higher. Really, just investors have been digesting the big move in gold, and the chart is pointing to higher pricing. And I think that's the side you need to be on. You definitely do not want to be betting against gold. It is, when you look at it from that monthly standpoint, which you and I looked at a long time ago, yep. We are in this huge bull market phase for gold. You do not want to step in its way. You either need to be long or at least just know that you do not want to bet against it because it is pointing to about 3750 based on this chart pattern.
Right. Now, silver has been showing real strength lately, holding above the key support and eyeing a breakthrough towards that $37.50 level, right? And possibly even $40. Now, do you see this as a sustainable uptrend, Chris, or are we just in a range-bound phase that short-term traders should take advantage of for now?
Yeah, silver, based on the technicals, is showing that it should rally to about $38 per ounce. So it has some more upside potential. There's been a big disconnect between gold, silver, and miners over the past couple of months.
Yeah.
If we were to just take a look at this chart, for example, of silver, we saw silver have this beautiful bull flag pattern, and then it started to strengthen up, and it's had a very strong move. It's been pushing up and having a lot of strength. We've seen the same with gold miners and silver miners. They've been moving up and rallying, kind of outperforming gold. And then again, if we just flip back to gold and we look at what it has been doing, gold has been trading sideways while gold and silver and miners have been going higher. So this is a sign that we're starting to see people are a little bored in gold because it's been going sideways. Now they're like, where can I make more money? And that is going to silver and the miners because they have more potential, more volatility, which means more potential upside. So aggressive traders are starting to move into silver and miners. And that's a good sign. It usually actually means gold is going to move after. So I like this scenario in the precious metal space. I think you should be either long the metal space in some way or a basket of all three of those.
Right. Now, as we wrap up, you mentioned this a little earlier. I mean, there's been fresh talk of Iran possibly closing the Strait of Hormuz. How big of a risk do you think that is for commodity markets? I mean, what kind of impact could it have on oil and metal prices if it actually happened? Talk of that battle easing now, but I mean, you've got to consider some possibilities, don't you?
I know. Yeah, you can't trust any talk. Talk is cheap these days, it seems. So there's a lot of volatility in the commodity space around it. Oil, we've seen oil have like a 20% pop just like that on the news. It also fizzled right out and came straight back down, back below $65 a barrel. So it adds a lot of volatility, a lot of risk. If more continues there and oil's prices continue to skyrocket, it's going to probably hurt miners because it's going to cost a lot more to get metals out of the ground. It'll become a big cost again. But right now, I'm still bearish on oil. If you scratch out the news, this news-based blip that we've seen, it really is just that. The overall long-term trend of oil is down. Precious metals are on a long-term trend going up. And you just have to know if you're going to get in the energy space, you better buckle up because any piece of news could move oil 10, 20% very quickly. And if you don't like that kind of volatility, you're best to just steer clear of that volatile space at the moment.
Chris Vermeulen from the Technical Traders. Thanks very much indeed for talking to us.
Always a pleasure. Thanks for having me.